everyone, Scott here, and this week we are talking about some of the specific parts of the Biden administration's proposed tax changes and how it might affect you or how it might not affect you. Now, if you're new here, we do a video every couple of weeks, and you can check those out at Carl's Corner. You can sign up for our email list so that you get these videos as soon as we send them out. You can also click subscribe underneath this video so that as soon as we post it, you'll get it. All right, so let's talk about the two specific parts of the proposed tax changes that might affect you. So the first one is the increase in the capital gains tax rate. So we're going to talk about that. The other one is the elimination of the step up in basis rule. So we're going to talk about both of those and how it might affect your retirement. So let's start with the capital gains tax rate. Well, first off, what's a capital gain? A capital gain is when you buy an asset, let's say at $1,000, and then a few years later it's worth $3,000 and you sell it. Well, you made a gain of $2,000, a capital gain of $2,000, so now you pay tax when you sell it on that $2,000. Now, the tax rates for a capital gain are a little bit different than the tax rates for ordinary income. Ordinary income being your wages, pension income, things like that. The capital gain tax rates look a little bit like this. From 0 to 40,000 if you're single, it's 0%. I really like a 0% tax rate. So a lot of times when we're doing tax planning for you, we're trying to get you under those thresholds. For married filing jointly, that 0% is under 80,000 income. Well, then you step up to a 15% capital gains rate. That's where a lot of you are going to fall. And then under current law, it steps up to 20% if you're in kind of that upper echelon tax bracket. But now let's talk about the proposed tax rate on capital gains. Well, for people that make over $1 million, the proposed rate is 39.6%, almost double what the highest capital gains tax rate is today. And this doesn't even include a 3.8% surcharge on top of that for high earners that helps pay for the Affordable Care Act, which I'm going to just we're going to forget about that, but that's there too. So all in all, they're saying that if you make over $1 million, your capital gains tax rate is 39.6% by itself. It's a pretty high rate. Now, I know what you're saying right now. You're maybe rolling your eyes. You're saying, Scott, I don't have to worry about this. I'm never going to make over $1 million. And for most of you, that's true. For most of us, that's true. But there are some scenarios that could happen where maybe you make over $1 million one time in your life, and that one time is the time it would burn you. So that might be if you own a business and you sell that business. Maybe you retire, you sell the business. I just had some clients a couple weeks ago that sold their business, dealing with that now, and they're retiring, but they had some taxes to pay when they sold the business. So that's a one-time event that could happen where in that 1 year, you might get to that $1 million threshold. Well, the other scenario might be you sell some land that you've owned, that your family's owned for a long time. There could be some significant capital gains built up there. Or maybe you just own a huge position in one stock. You know, maybe you've worked at a company for a long time, you've owned stock for your whole career, and now you need to diversify, so you sell it. It's possible that you could have a capital gain that gets you into that $1 million tax bracket, especially if you combine that with, you know, a buyout or a severance where your income is inflated in 1 year. So those are some scenarios where everyday folks like us could have an income of over $1 million and actually hit that 39.6% rate. Now, the potential change, though, that I think is going to affect a lot more of us and a lot of you is the elimination of the step up in basis. So what is the step up in basis? Well, a step up in basis under current law is, let's say you bought land. We're going to use land as an example because we have a lot of clients that have family land. Let's say you bought land when you were young and you bought it for $100,000. Well, now we are 40, 30 years later, and you pass away, and when you pass away, that land is worth $1.1 million. So you have a capital gain of $1 million built in there. Well, under current law, that cost basis steps up to the value at the time of death. So if your kids that inherit that land, if they sell it right away, they pay no capital gains tax whatsoever. What the Biden administration wants to do, though, is they want to get rid of that rule. They want to eliminate the step up in basis so that at death, that tax is due right away. That capital gain is due right away. So on $1 million capital gain at 39.6%, that's $396,000. That's just the capital gains tax. That's not factoring in that surcharge I was talking about. That's not factoring in state taxes. So that's $396,000 in extra taxes that you could owe that under current law you would owe zero. So that's a big, big deal. And I think that one right there, that elimination of the step up in basis, might affect a lot more of it. Now, I do have some good news for you. If the capital gain is less than $1 million, the Biden administration is saying that you'll be exempted from that elimination of the step up. And for a married couple, it's $2.5 million. So there's still a lot of gray area on who's going to be affected. So potentially it's still only for those huge, huge gains that's going to be affected. But there's probably some planning that needs to go into it if these proposed changes do go into law. You know, we might need to strategically take some of those gains at the 15% rate. We may need to be gifting a little bit more aggressively to the next generation, so on and so forth. So there might be some strategies to avoid that 39.6% rate. We're just going to have to see where the law actually falls down and where they land. Now, here's some speculation for you. I think, and kind of what I've been reading, is that probably the odds of this 39.6% rate and this step up in basis, it's probably going to be dead on arrival. Probably not going to pass as is. I think what's more likely is that 39.6% rate ends up being something like 25%. So they might add a little bit to the current top, which is 20. But that's a nice ring to it, right? 0, 15, 20, 25. That makes a little more sense than going from 0, 15, 20 to 39.6. So, you know, Biden administration might have started at the 39.6 as a bargaining chip so that then the other side can come in and say, well, let's lower it to 25, and now both sides feel like they won. And I also think it's very possible that they might even raise those exemption amounts that I talked about, where if your capital gain is less than $1 million, if you're single at death, well, that's going to be exempted. I think they might even raise that. So we'll see. That's why it's just a proposed law right now. It's not law. It has to go through a lot more process before we get there, but we want to start thinking about that. So if you feel like you might be affected, it is a good time to come and see us. Just making sure we're taking the proper steps in case it does become law. All right, that's it this week. So if you enjoyed this video, go ahead and like it for us. We'd appreciate that. And go ahead and subscribe so that you get the video as soon as we post it. And you can also go check us out at carlsonfinancial.com. Up in Carl's Corner, you'll see all of our past videos that we've done and get a lot of good information there. You can also reach us at 844-CARLSON. And hope to see you soon. Have a good rest of your day.